Hey, Dustin Tibbetts here, financial advisor with jazzWealth Managers, and today we're going to answer an email that I got from a potential client that said, hey Dustin, thinking about opening a Roth IRA with you guys, just curious how you will manage my investments, how do we decide how much risk I will take? And they wanted to kind of know how we balance things out. Well, I've given this one a lot of thought. I don't want to get too geeky and detailed that you don't want to watch, but I do want to explain how we do things. So I've got the whiteboard. Let's get started. Here's what we do. We use exchange traded funds. You can go to jazzwealth.com and see kind of our approach, how we invest. But to start, let's say I'm only going to do 4. We use 7 to 12 different exchange traded funds, depending on what the markets are like and how we're trying to approach each individual's risk. Now here's the thing, there's 7 of them, I'm only going to use 4 for our example, but we'll take and say, all right, let's do a certain percentage in this one, let's do a certain percentage in this one, let's say that's a little bit more. We got some orange here, that's a nice color. Let's say some of it is invested in this one pretty aggressively. And then I'll go, does my red work? Does my red work? Yeah. And so just pretend that we take the amount that you contribute to your Roth IRA and we divide it up into actually 7 to 12 different exchange traded funds, and that's how we balance it based on the risk you want to take. So my best example here is to say, let's say this is the stock market's returns over a period of time and they just kind of do whatever. Stupid little line, okay. And let's say you say, hey look, I don't want to take this level of risk. I'd like to be, I want to see growth. Maybe I'm saving for retirement that's 10 years away, or I'm going to buy a house in 5 years, or there's something that says I don't want to take market level risk, meaning I don't want my portfolio to move exactly with the market, because what happens, as we saw this last week, when the markets take a nosedive, I don't want that risk. So some people come to us when they're opening their account, they say, answer a few questions, and we determine they should take risk that looks more like this, right? A little less risk, so that when the markets are doing well, of course they're participating in that, but when the markets do poorly, they don't participate one for one. Here's the thing, I get this question a lot where people say, can you build a portfolio that outpaces the market? 100% yes we can, using exchange traded funds. And then I get the question, or people post online, 90% of advisors can't beat the stock market, so what makes you think you can? Well, I always encourage you to look deeper into any study that you sort of follow. Well, every study that says advisors do not beat the market, go and look at the average age of that client. See, financial advisors want to work with clients that are in their 60s or in their 50s because they've saved up all this money. It just means more money they can make. Well, I don't work with 50-year-olds. I do, but I don't work with a lot of 50 or 60-year-olds, so we can afford to take an aggressive type of approach. Well, if most financial advisors work with people close to retirement, then they can't take that type of risk to be on track or outpace the market. So of course, most financial advisors do not outpace the market. It's because they can't take that level of risk with their clients. So really think about that when you go in to look at these studies. Now, in this case, if a client of ours says, I want to take sort of below average risk, then what we do is with the 7 to 12 different funds, we'll adjust them. We'll say, how about a little bit here, a little less here, and a little more maybe over here. And we're constantly adjusting these portfolios to make sure we're moving at the speed that you want to. It's not guessing. We have the exchange traded funds that we use, and we are constantly in there adjusting for how you want your returns to be. So if you have 10 plus years left to go, then we want to participate very much one for one with the market, or have the ability to outpace that. Now recently our clients, we did see that we were outpacing the markets, but what's interesting is, since we're constantly adjusting these ETFs, our clients don't pay trading commissions, so we can adjust on a daily basis if we want to. since we're constantly adjusting, when the markets just recently got volatile here, you saw it, the last week was pretty weird. We had a pretty severe drop and then this big rally, and we had this sort of thing going on all of a sudden, just crazy. Well, if you're one of our clients, go look at your portfolio. What you saw, even in our most aggressive portfolio, was this. You were not as bad as the market. So while the markets may have fallen, it depends on where you're at, 6, 8%, whatever the return or the focus was for you, we were able to adjust and say, okay, we're not going to lose as much. The markets fell aggressively. That was scary. That was really weird. That doesn't happen a lot. But by us being able to adjust here and constantly being able to keep you on the right track, but say, okay, let's go and change a few things here, we're able to stop you from losing as much, okay? So I just wanted to explain that real quickly, that is how we approach things. We have a basket of exchange-traded funds, in my opinion, much better than mutual funds, and what we do is every other day, we kind of look at them and say, how are they moving? What speed are they moving at? Are they giving us what the client wants? Are they giving us less than what the clients want? And if so, let's adjust that. Are the person that's taking very little risk, is that mix of exchange traded funds giving that to them? A little bit of growth, but not a lot of risk. And that's really kind of our secret sauce. There's nothing automated about it. We're always looking at these portfolios that we offer and tweaking them by even, fractions of a share if that's what we have to do. So if you're interested and you want to work with jazzWealth, just go to jazzwealth.com, click Invest Now. The best part about the whole thing is you always keep your account in your name. You never send me a penny, you never send anybody here a penny. You open the account, we'll just manage it. We'll help you put the money in, we'll help you take the money out, whatever, but we can't touch it on our own. And I think that to us, we like to say that's instant trust in jazzWealth. So check it out. If you have more questions, go to jazzWealth, click Chat with Jazz. We can find a time that works for you. Otherwise, be on the lookout for our new class schedule. We're going to be doing live classes online, but live classes to teach you a lot more about investing, how we might be able to help you. And then, of course, for clients of ours, be on the lookout for Wine and Wealth, where you have a glass of wine with me. We're going to talk about some things that maybe you've never even heard of as far as your personal finances and your investments. So thank you for watching. We'll talk to you soon. Well, I hope you liked that video, and if so, then there may be another one up there that you're interested in. If you're thinking of opening or transferring a retirement account from somewhere else, click our logo over here and that'll take you to our website to get started, or you can then click Chat with Jazz and I'll be happy to answer any questions you have. Thanks for watching, and I hope to talk to you soon.